Biden going communist on mortgages, hiking fees for those with good credit scores to subsidize people with terrible credit scores. First thing I wanted to talk about was this mortgage thing, because a lot of the news sites like Fox News, etc., and even some of the more moderate, centrist sites have been going a little crazy about this this new mortgage rule, which was actually announced in January, I found out. So it's not even new, but they only just started reporting on it now because the deadline for it, when it's going to come in, is May 1st. So this is the headline Fox News has: Biden rule will redistribute high-risk loan costs to homeowners with good credit. Okay, so that's kind of shocking. Let's tell you what actually is happening. So they say in the article, which is true, mortgages will get around $40 a month more expensive for people with good credit scores and good down payments. So like to sort of shock you, first of all, that's going to amount to $480 a year in extra costs and $14,400 extra that you would pay over a 30-year mortgage. Okay, so it is quite significant. And basically what they're doing is there is this fee called the loan level price adjustment. That's from Fannie Mae and Freddie Mac. And it's a percentage of the house's price, a very small percent of the house's price, and it's part of your closing costs. Now, a lot of people don't necessarily pay it as a closing cost. It sometimes gets distributed over the lifetime of the mortgage in the form of a higher interest payment. But anyway, this fee, they are adjusting the sort of structure of this fee so that people with good credit scores actually pay a little bit more, a little bit higher fee than they used to. And people with poor credit scores and also especially low down payments, like under 5%, these people pay less than they used to. So that's the explanation of it. What do you think?
This is crazy. You're going to reward people for having bad credit when they go to get a loan, and penalize those who have good credit when they go to get a loan on a home. After I heard this news, I was legitimately thinking to myself, is it better for me to just have like a mediocre credit score and try to go get loans for homes?
No, it's not.
Yeah, it's not. But like,
that's what they're doing though. Yeah, so the way you just described it, I think, is the way what hits you first when you read the article. But what's actually happening is you're still getting rewarded for having a good credit score, but you're just getting rewarded less than you used to. We can actually show you whose fee is increasing slightly and whose is going down. So here's the heat map, what we call a heat map of credit scores on the left-hand side and down payments across the top. Okay, so that's so you can see that people who have credit scores between 720 and 760 and down payments of around 20%, so they're borrowing 80 to 85% of the house value, those people, their fee is increasing. Their loan level adjustment fee is increasing slightly.
Those are the people that are getting loans. Those are your core buyers.
Yeah, that's a funny thing, isn't it? Yeah, 20% down payment and a credit score around 750. That's what people aim at. That's what people want. That's what everyone thinks. Oh, I got to get to that level. But the interesting thing of this chart is that, so like we said, although we see like red in the chart, don't get fooled. The people at the top of this chart are still paying a lower fee than the people at the bottom. It's just the people at the bottom used to pay something like 13 times as much as the people at the top. Now they're going to be paying around 7 times as much in terms of fees as the people at the top. So it's evening it out. It is kind of socialist in a way, because it's kind of evening out the playing field. But don't forget, this is just one fee. The interest rates are still going to go down as you go up in credit score. So that's not changing. It's just this other thing, this fee thing. But what the interesting thing is, though, on the right-hand side of the chart, you can see fees are decreasing for everyone who has a down payment under 5%, which could just be an indication of the current economic climate where people don't have as much money because, or should I say, maybe people have the same amount of money, but house prices have inflated so much that people are no longer able to pull together the 20% down payments. So it is cool to see that people with low down payments are actually being kind of rewarded in a way, which from my point of view, it's like, well, you can use this to your advantage. Okay. So in general, you want to still get your credit score as high as possible, but actually now just be aware, hey, if you get a lower down payment, you're not actually going to pay as much in fees as you used to. So that could, you can always use these things to the advantage.
Yeah, you can definitely do some things with it. There's always ways to work in home buying. I've always thought that the United States market for home buying is nationalized on some levels with Fannie Mae and Freddie Mac. I mean, they buy up all the mortgages. There wouldn't be enough liquidity in the market in order for us to have the amount of mortgages that go through. But it's interesting to think about from what happened today. The new home building loan applications went down 9% this month so far.
Wow.
So when you're talking about permits and things like that, they're dropping. Everything's coming down. The earnings reports are coming out, and you're going to see, more and more of the whole economy is coming down. I think it's 4.5% below the current earnings reports that have come out from all the companies that are on the market. They're 4.5% less earnings than it was this time last year.
The home
So
builders.
just the whole market in general, the home builders are coming in with less permits. So the home builders have applied for 9% less permits. That's 1 out of 10 homes is not being built now than it was last year.
When
And
reading
that
about
has
this,
to
some
do.
people are even talking about being able to get mortgages with less than a 20% down payment with no private mortgage insurance, just because there are so little mortgages being applied for that banks are letting people do that.
Yeah, the PMI stuff's going to happen, but the problem is with people and their down payments. I wouldn't be surprised if the PMI, the private mortgage insurance that you need for anything below 20%, goes down to 15%. That becomes an industry standard here in the next year because of the fact that you're going to have a point where the housing market's going down, right? Slowly going down, but inflation's coming up. It's going to meet somewhere, and that's going to be your perennium. It's gonna be the market medium where you go, okay, the cost of money or the value of money is down so low and the cost of the house is down. It's gonna meet. So even if the cost of the house is going down, money's value is still going less and less. So you're gonna say, well, my house is worth 300,000. Well, the money's not worth it anymore. So it's 350. So that's what you're running into in the mortgage world. And this type of information doesn't help mortgage people because like it was when I first started out here. So what? I'm going to pay more for bad credit? Everybody's going to think that. The whole country is going to go, I'm going to pay more for bad credit. I don't want to do this now. So in an industry that's already at a 30 to 40-year low, the mortgage industry applications, 40-year low right now. The last time it was this bad was in the 80s. So now the government's going to add some more criteria to scare people, whatever it does. I mean, I don't think they do it on purpose to scare people. It's just the reality of what's happening. It's scaring people.
So what do you think? Are we sliding into communism, or is it just they're adjusting the system to meet the current economic climate?
I mean, I think everywhere in the world has some nationalization, socialization aspects in every part of all of our governments. And some people will say, well, it's because there's the amount of people. And it's like, no, the most lucrative time for society is when there's less regulation on people's abilities to do things. So you make more money when there's less regulations. If for example, like we say the FDA, they approve certain types of food. The ketchup packet in the United States has 20 ingredients versus the one in the UK has what, 4, 5? So it's like, is it really helping, or is it just some way to make money for some government subsidized ability? So I'd be curious to see if there's any dirty money into this funding on the back end of where the companies that are funneling this extra $14,000 every 30 years. Where does that $40 actually go and start and end? Does it help, or is it just another?
That was what someone else mentioned, was that it's just a tax. It's just another tax, because most people who, well, a lot of people, at least people, aspire to be in that range, right, of the 750 credit score with the 20% down payment. So if that's where a lot of people are buying houses and they suddenly got more expensive, it's just an extra tax on them.
Right.
It could just be a cash grab. Yeah.
Yeah, and then that's the biggest problem right there is the we're already the inflation. That's a hidden tax, right? That everybody has to pay whether we want to deal with it or not. Our money's worth less than what we made yesterday. And so now if you want to buy a home, which is probably the most conservative investment in the history of the United States, and the most stable, even though there's been ups and downs, eddies and flows like with anything, now you're going to get taxed for trying to become better at it. So it's interesting to see where that money goes. I guarantee it just goes into the slush box, and we'll see where it never ends up. So it's sad, but yeah, are we sliding into communism? For sure. I mean, that's exactly what this fundamentally is another excessive tax on earnings for the person by the government. Just what it is.
Especially for the middle class as well, isn't it? I think a lot of middle class people are in that range of, because the rich people can buy with cash. The middle class people are still getting mortgages, but they have the good credit scores and the decent down payments.